Hello everybody, welcome to this special presentation. Today we have a special guest. We have Mr. Jef Hussey, VP Corporate Communications of Champion Iron Mines. If we take a look at the graph here of Champion Iron Mines, the company is near starting a breakout if ever it breaks that 24.57 resistance, technically speaking. But Mr. Hussey is there, is going to tell us why you should consider his company as your potential investment. So Mr. Hussey, thanks for coming by.
Thank you for having me.
Excellent. So let's talk of your feasibility study. You just made a preliminary feasibility study of your project at Fermont, 1.3 billion capex and an NPV of $3.3 billion. So what are the steps to actually complete that feasibility study?
Yeah, we put out our pre-feasibility study in February. And as you mentioned, it showed very robust economic numbers. Right now, our focus is on getting a low-cost rail solution. Within the study, the second largest cost center is rail. That's typically the case with iron developers and iron mines, but more so in iron developers because you have a financing of the rail that you have to incorporate in those costs. So what we're looking at doing is working with different stakeholders in developing a multi-user rail that will help to develop the Labrador Trough, not only us, but others. We're closest to the North Shore, and so what I call phase one is to go from the port of Sept-Îles up to our project, and then from our project continue towards the Labrador City, which is about 70 kilometers away, and then go up to Schefferville and beyond. So that would be the ultimate rail that goes up to unlock the value of the trough.
So is that red line that we see here in the graph?
That's the phase one. That would be the first phase, getting to our project, and then from there, we haven't designed it any beyond that. But we would have to sit down with all the users, and that's what everyone, I think, wants to do. Most of the iron ore developers look for a low-cost transportation solution. Currently, there's two rails. There's one that passes on our project that is a private rail, and the other is a common rail. We have two options. One is to do the proposed railway to the south. The other would be to go north, connect at Bloom Lake, and go around. But it's a much longer route. It's a much more costly route. So that's why we've been working hard at trying to get energy into developing a rail to the south, and that will benefit all. And then from that point, we can increase that capacity substantially. We could go as high as 200 million tons or more. Whereas it is more difficult on existing rails with existing traffic to develop that capacity.
Okay. Concerning, because recently I've seen in the news there are a lot of steel producers in the area, New Millennium, I think Labrador Iron Mines, that actually posted some good news. Some of them signed a deal with Tata, another New Millennium actually shipped their ore. What makes your project different or stand out compared to the others in terms of grade or in terms of the economics?
Yeah, the first iron mine that was built in recent time was Consolidated Thompson. We're a similar story to that. People thought we were like a sister company. It's the same kind of mineralization. Ours is a little bit coarser, a little bit better. But what you're hearing now is coming from Schefferville, which is another few hundred kilometers up north. And these are smaller scale mines. It's direct shipping ore called. It's 1 or 2 million tons where they don't have to concentrate. So there's a little bit of traffic coming on the rail from those projects. The real potential is to develop, like where we are in the southern part of the trough where it's coarse grain. We have the potential for one line, which is our pre-feasibility and the numbers you talked about, but we have the potential to quadruple that or more just within our large land holding of 750 square kilometers. But then if the rail was to continue up north, there's a lot of what I call finer grained ore, but there's a lot of it. There's potential for New Millennium is order of magnitude is 22 million tons. Adriana to the north of that is 50. There's other projects. New Millennium as well has a 22 million ton New Millennium and Century both have. So there you're getting close to 100 million tons that could come. That was not economic in the past because it's tougher to separate the iron from the waste, and there wasn't enough infrastructure. There's no power lines going through Schefferville. So if we're able to bring the infrastructure to them, it'll really benefit all of Quebec and all of Canada. We want to start with phase one with our project, and that is the beginning of getting that rail up to help them. So working hard with stakeholders to try and come together and find a solution that will initiate the opening of the trough, and it'll benefit all.
If I when I was reading at the recent press release that you guys released, if I have one word that stood in my mind when I was reading the press release, is that you guys seems to be resilient, because after CN said no to the railway, you guys move forward. You know what? We're going to talk to other stakeholders to actually build another railway. So how are the negotiations going right now with those other partners? Are you see that they still have the same energy?
We've had several discussions, and we continue to have these discussions. As I mentioned a little earlier, any developer is going to want a low-cost solution. So everyone is interested in that. It's just how do we get there? So we're looking at several scenarios, but since the CN has terminated their study, we have to get going, because there's a great opportunity in front of us, and we want to take advantage of it.
And in terms of cost, what are you looking for the transportation here?
Well, it depends where you are in the trough.
Okay.
What we see is less than $5 a ton from our mine if the rail is paid for. But
Okay.
once you bring in the financing costs, it's 5+.
Okay.
So it depends how you approach that financing aspect. In the results of our study that we put out, we actually included over $1 billion cost of rail in the model, but we don't propose to do that.
Okay.
We didn't have a study on hand, and we didn't have the users signed up to do a multi-user. So right now we're getting back to basics, which is getting the parties together as much as they're interested, and trying to develop a solution. We don't need to build as big of a scale operation or rail scenario. It's just to start a 20 million ton per year rail with a certain number of sidings. That would, just with our production, with time, we could support that kind of an economic model, but it's too much of a stretch in these capital markets. So we're looking to partners, see what other people, maybe the people up north that you were talking about with direct shipping ore would want to get on that line, maybe other people that are developing. And so it's kind of early to say who is where, but we're trying to bring people back together in our own way, and everyone else is interested as well. Like there's signs of interest, because we all want to get going. We've been developing and doing studies for a while. Now we want to start building.
So, we know that China is the biggest consumer of iron and steel. They always need to build new homes for their rising middle class. You have a partner, Baotu, which actually is a financing partner. So would you might consider Baotu as a potential partner in financing the railway, or help you find contacts to help finance the railway? Because especially in those tough capital markets.
That's exactly right. We're actually, last weekend, we were up to the site with them, and they like the project very much, and so we're off to a good start there.
Okay.
And we'll continue to discuss with them, but I think they are interested, and I think that there's other strategic partners as well that are interested as we go forward, because the fundamentals haven't changed.
Okay.
The market, the capital markets have gotten a little bit shy in the last 2 years. We're in a bear market as far as the resources go. But the fundamentals haven't changed. The price of iron ore has stayed, the 3-year average has stayed where it's supposed to be.
Okay.
All of these projects are most sensitive to price. Right now it's above 115, it's at about 133.
Okay.
And there's been record steel in this last year, where everyone talks about the volatility, yes, but if you look at the average of the price of iron ore and the fundamentals of the demand, I think we got a great opportunity, and we want to get going on our project and get it producing and get some cash flow going. And that, with the rail, will be the first step. Then we'll go to a feasibility. We see the potential at Fire Lake North to double production. We see just north of that at Oil Can to double it again. And as we go through that process, I'm sure we'll find a strategic partner that will want to join us on that ride.
Help me through the milestone, because as you mentioned, phase 1 of the railway needs to be, you're looking for some partners to actually finance it and build it. Yes, there's some potential in the other portion of the Fermont property. There's Fire North Lake, which is where you find the resources, but there are also other portions.
Yeah, there's producers. We're surrounded by 5 producers.
And what about the port of Sept-Îles? Because if the railway is completed, you're going to need also a port to ship that ore to China or to other countries.
Exactly right.
I know you guys were a shareholder also of the port of Sept-Îles, because the port of Sept-Îles needs to expand its capacity. So are you also moving on that front to see are the negotiations
Absolutely.
moving forward, or?
Well, the Port of Sept-Îles, the project, is on time and on budget to start up in March of next year.
Okay.
This year, we had to remove ourselves from the partnership temporarily to just control cash.
Okay.
But obviously, we want to get back in a partnership with them as soon as we can, and that requires the capital markets to come back some. But the first step is the rail. That is a priority. That rail would come into a stockpile reclaim yard where us and another concept is a multi-user stockpile reclaim yard to load to the central tower of the Port of Sept-Îles and then onwards to the ships. But they have a lot of room to move. They have capacity to expand, and they're on budget, on schedule. So that part is there. It's more the rail getting down there with good capacity and stockpile reclaiming capacity to load the ships. And I think that'll be a great day when we see that all come together.
All right. In terms of, now let's talk cash. 15 million in cash, project where CapEx is at $1.3 billion. In terms of your stock, you guys were really impacted compared to other companies where, well, they don't have the same challenges that you guys face, especially with the railway. But are you guys really disciplined with your cash management? How you intend to manage the 15 million and make sure that you don't excessively dilute the company by going to the market and
Yeah. Right now we have 15 million cash receivables on hand, and what we're benefiting from is the large amount of money, close to 50 million or 60 million dollars that we put into the ground to build our value, which is in the ground, ready to develop. We've done the drilling. Now we just have to do certain studies. We have to wrap up a feasibility study. We have to wrap up the ESIA study. But that's not going to require large sums of money. So we're very cash conscious at this point. Again, the catalyst is going to be this rail study. So if we can get the rail going, then because there's a bit of a longer construction window for the rail, as soon as the rail goes, we're going to turn on the feasibility and move towards permitting and construction and all the steps it takes. But the first step is the rail.
Excellent. So in terms of the milestone that Champion needs to accomplish to finally see the heydays of that we saw around 2010, 2011 here, when the stock was at 275. What are the milestones that your company needs to accomplish to actually see those heydays back again?
Yeah, well, I think with our story, we have two solutions for the rail. We can go to the north, or we can find a much more efficient solution to the south. So I think that again is the big catalyst, is finding a solution to the south. If not, we'll look at going to the north. It's a little bit less efficient, but we could do that. The next step is to finish the feasibility study. We're looking at a feasibility study for one production line, 9.3 million tons per year. Early on, it's 9.8 because the ore is a little higher grade, and we have capacity to expand that. So we just want to get going with the first production line. Once we get to that point, that means we have permits, we're starting to construct. In and around that time, a strategic partner will probably want to join us.
Okay.
And that will, I think, those are the three big milestones going forward. So the rail and feasibility, and then get a partner somewhere along the way. And right now we're off to a good start with Baotao. They've, like I said, they came up to the site last week, and it's looking good so far.
So we could say it's RFP, rail.
RFP. That's how I remembered it.
Excellent. So, Mr. Hussey, I hope you come by again and to tell us more about what's going on with the railway, because I think it's going to be a big catalyst for your project. And so, when can we expect some major announcement in the next 6 months, or?
We hope so. We want to get going. We're continuing on with the studies, and we're continuing to discuss with people. I think now it's just a matter of, it's getting close to winter time, so the field work will really take off again next spring. But we have work to get ready for that field work, and we hope to start soon. So I hope within less than 6 months.
Okay, excellent. So 3 letters to remember: RFP for Champion, railway, feasibility, and eventually a partner. So, Mr. Hussey, thank you again.
Thank you very much.
And we look forward to receive you again.
Thank you very much.
Thank you.